Meta has been on an epic run this year, and this is why I just absolutely love investing. I mean, we were able to just gobble up shares under $100. It seemed like forever. It wasn't forever, it was really quick. But the point being, we were able to gobble up shares so cheap that now we are sitting on a triple up in the stock and we're absolutely looking for more. But the question becomes, is there actually more room for Meta to run? That's the first one. Two, how do you even determine that in the first place? And what is the valuation for Meta stock? Well, I'll actually give you the answers to those questions today, and we'll actually take a look at what Wall Street thinks as well, because it's probably going to change your mind in regards to Meta stock. I know nobody listens to Wall Street, but keep in mind they were the same idiots that beat it all the way down into the 80s last year. And that, of course, triggered us to buy shares like absolutely mad people during that time. So it actually does pay to listen to what they're saying about the time about the stock. And you wouldn't have missed Meta in the 80s, Tesla in the low 100s, Palantir in the 6s, and a bunch more stocks if you were a member of my group, which is on sale right now, and it ends this weekend, guys. So you need to act right now if you want to see all my buy and sell alerts at real time. You want to see my watch list complete with price targets. You want to use the stock analyzer tool completely for free, take 5 courses for free, be able to slide into my DMs, jump on our live Q&As, get 3, 4, 5 videos a week exclusively just to the group, be a part of this best 6, 7, and 8-figure Discord out there, and a ton more, guys. Just check out the pinned comment and make sure you take advantage of this sale before it ends this weekend. All right, so let's get back to this here and see exactly what we have in regards to Meta.
Platforms. The stock was up about $5 or about 1% last month when the overall market was getting hit. Shares are up over 153% so far in 2023. Kev, when you look at this company, they had their Meta Connect, their developers conference last week. They came out with a bunch of stuff on AI. The year of efficiency is still going well for Mark Zuckerberg. What's your take here on Meta?
I think this is a company that's gone through a really tumultuous time and come out on the other end, and the year of efficiency seems to be working. Now the stock is stalled up here around 300 and some dollars, 304 today. It's not cheap in terms of valuation anymore. I think the good news, what they're doing in terms of their growth going forward, is Reels. Reels is getting closer and closer to profitability and them to be able to get over the hump of Reels. Because think about it, Tom.
Yeah, that is true. Reels is definitely going to be the next big. That's the beauty of Meta. There's a lot of drivers like that. I don't even think Reels is the real opportunity. I actually think it's WhatsApp and monetizing WhatsApp. I know here in the US, it's not nearly as popular, but in the rest of the world, extremely popular. There's a huge opportunity there. That right there is where a lot of that future growth is going to come. But you kind of see they weren't monetizing things the way that they could be monetizing them. And kind of as this year continues to go, this is the reason why, whenever we talk about valuation here in just a minute, why where that kind of long-term thesis kind of lays out kind of the roadmap and the plan for Meta, because there's a lot of money left to come in regards to this stock. It's not like WhatsApp is new and it needs to grow. No, WhatsApp audience is already there. They just need to monetize. And the same exact thing with Reels. Instagram's already there. People are already using Reels. It's just got to get over the hump in terms of getting profitable. And then at that stage, man, just look out, look and see what all comes to the bottom line there.
If you're trying to monetize Reels go slower than clicking on a news item or scrolling through the Facebook platform. If you're on Instagram and you're watching Reels, it's a slower feed. It's a longer watch. So that revenue per minute is what they're trying to get up in Reels. And I think when they do that, this stock could have another leg. But right now, I think it's kind of stuck here around 300 to hit 326. Now it's stuck here around $300 looking for, it's got earnings coming up in a couple of weeks. That'll be pretty important. But, they have viewers and they have advertising will be obviously key to them. But they're working very hard to get Reels to a profitable level, Tom.
Yeah, definitely trying to monetize that. There was a Barron's article this weekend came out and said their decision to change the name to Meta was the silliest ideas in American corporate history, or they think it's going to be,
Yep.
Alex. So that was kind of funny. But, if you look at this.
Yeah, probably not the best look, but is what it is. See what they were going for. He was all in on it at the time. Still all in on it per se, but in a very responsible manner, the way he should have been in the first place. So in regards to it being the worst name ever, there's a lot of bad names out there with stocks. I would say Square changing to Block may have been, just as bad. I don't know. There's a lot of silliness with names, a lot of silly names out there, period. In the end, it doesn't matter one single bit in regards to the stock. So just something you kind of chuckle at and move on.
3 billion monthly active users across all their platforms globally. So if the advertising market's doing pretty well and they're able to monetize that, then Meta's doing well because they make 90% of their money from advertising, right?
Yeah, exactly. And if you're an advertiser, small business, there's a few places that are going to potentially have more reach for the cost than something like Facebook or Instagram or one of the platforms under the Meta umbrella. Like Kev said, though, the valuation swelled quite a bit in this rally. It's no longer cheap relative to, let's say, a 5-year forward PE sort of ratio that you've normally seen. It's about
Uh, Always comical to me when these guys are talking about valuation, saying it's not cheap anymore. These were the same guys saying it was overvalued last year whenever the PE was around 10, 9, 8, under 10. These were the same guys saying, I don't know, it may very well, this may be a justification, this valuation may very well be justified back then. Now it's getting back to much more of a normal valuation, and these guys are talking about, well, it could very well be overvalued now. I don't know. We need to take a look at this. It's just buffoonery from these Wall Street guys in regards to that.
in line with that. How I would frame this is the easy part of the recovery has been done. I mean, this stock went from 384 down to 88 on largely, general macro and market weakness, but also kind of a tone deaf company leadership when it was forcing kind of additional spending on its shareholders in a sense by going all in on the metaverse when the rest of the market and what the street really wanted was a little bit more efficiency and a little bit more focus on earnings power.
Yeah, let me help this guy out with that. Yes, they were overdoing it. However, Wall Street's punishment, beating it all the way down to the levels it got to, was utterly ridiculous. It was one of the craziest, and I've been on the market a long time, over 20 plus years, and I've not seen a beatdown like that to a stock for, it's not like their earnings were terrible. That's the funny part. It's not like they were, yes, they were burning money on the metaverse, but they were still profitable. They were still printing billions of dollars, but yet here was Wall Street beating it down like they were going bankrupt. Was really the way that they were pricing that stock at that stage. Like he was driving them into bankruptcy when nothing was further from the truth in regards to the actual numbers in the stock. So while I agree they weren't treating shareholders right, they were spending too much money on the metaverse, there was too much focus there. There was a lot of other monetization avenues that they weren't pursuing as heavily. They were pursuing some, not as heavily as they should have, that they should have maybe spent less on the metaverse and put more of it there, which they are doing now. But in regards to it just being where it was just beaten down to these epic levels, it had zero to do with anything other than just Wall Street getting that absolutely stupid. That's why I couldn't stop spending money on the stock and just continuing to buy it and continuing to buy it and continuing to buy it with no end in sight, because I was just like, this is just dumb. Like none of it. The narrative made sense. The numbers, what was said on earnings, what was happening on earnings, what the numbers said, and then what Wall Street was saying, they were so polar opposite. I mean, it was just like, are you guys even looking at the numbers anymore? Or are we just going with the narrative and running and just pretending like the numbers don't even exist? Because that's how utterly ridiculous it was at that time for Meta stock.
The company maybe late to the game realized this and made a pretty nice shift at the end of the year last year and has really relied on this year of efficiency. But it's not really going to be a story you can keep telling. You can only cut the job so many times. You can only focus on becoming a leaner company once. And so once you've done that, then it's focused on the core business. And the core business really hasn't been that bright of a spot, but it hasn't been bad either. Really a company that while it's in this tech space, it's going to be correlated to yields and some of the other mega caps, really is a little bit more cyclical than maybe it gets credit for, because if the economy works its way downwards on a trajectory, I have to imagine that the advertising budgets are going to go first.
Yeah, and they got earnings on the 25th of this month, Alex. So we'll get some more clarity on how that year.
All right. So, in regards to his last statement there, yes, as it kind of moves its way down and kind of as the economy moves its way down, you're right. Advertising always takes a hit. However, they have these huge billion plus user segments that they're just now starting to monetize. So even though you may see advertising dollars come down, as they're able to monetize WhatsApp and Reels more in the future here, and so you kind of see one's going down, but now I have more places to place, even though they're cheaper ads, not nearly as good. And you kind of see how that kind of makes up for it to where those earnings can continue to advance forward. You consider, excuse me if I could talk, you start to see those EPS numbers continue to rise, revenue numbers continue to rise, despite the fact that some of the decline in advertising is absolutely going to happen just because of the expansion into those other billions of users and starting to monetize them. So that's absolutely something for me that I see as Meta stock maybe kind of being a little bit insulated from any sort of a downturn, because it's not like they're out there maximizing everything and therefore everything's maximized and the only place you can go is down if advertising slows. It's not true. They have huge growth in these other avenues that are just now starting to get tapped into. So that to me right there is a case to where you can make a fair valuation that Meta is not going to be as affected by the slowdown as maybe somebody like a Google or somebody like that who is already maximizing all their lines of business in regards to advertising. And obviously any sort of a slowdown in advertising is going to slow down exactly what they're doing there at a stock like Google. So now on to valuation in regards to Meta. And to me, it's still a little bit undervalued. It's not obviously not crazy undervalued like it was last year. That was a once in a lifetime type opportunity and a great mega cap stock like Meta. If you missed it, I'm sorry. I don't know what else I could do. I was here on this channel trying to say, hey, buy, 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 buy. There's no reason not to buy. This valuation is incredible. But in regards to valuation now, I think it's a tad undervalued. If you wanted to call it fair value, I wouldn't argue that, because I could definitely make a case for, okay, slowing growth rates as Meta continues to get bigger and bigger and bigger. I mean, how many more billions can they add? I mean, they have like 3/4 of the world already, or half the world already using their product there. Growth whenever you're that size is really, really hard to do. So I wouldn't argue a little bit of a lower valuation there. However, I do believe that the business has some insulation from some of the slowdown that may come this next year. And that to me makes me excited. And hey, maybe Wall Street gets dumb again, but you're still not really overpaying for Meta. I guess that's kind of my point. I don't think we're to that point yet. Now we start getting up around $400. Okay, I can definitely make a case there that that's absolutely where we're at. But right now we are not at that stage yet. So in regards to what Wall Street's going to do in the meantime, who freaking knows? I never thought that I would ever see Meta beaten down like it was, and they did it. And they did it aggressively and quickly. So, you never know what Wall Street's going to do. But that right there is kind of my current thoughts on Meta. In regards to valuation, in regards to what Wall Street's thinking. And it really has me kind of excited for what the opportunity is coming forward as they start to monetize Reels, as they start to monetize WhatsApp more, and more importantly, we start to really see that growth come in those sectors. Man, it's just, there's a lot of opportunity there, and it just makes me excited to own the stock and to have the stock. And remember, if you want to see my analysis on stocks like this, you want to be able to ask me questions directly about that, you want to see my watch list complete with price targets every time I buy a stock like Meta or any other stock, and you want to use the stock analyzer tool for free, you want to be able to slide in my DMs, watch all the exclusive videos. There's so much, guys. Just check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.